Grab a coffee, sit back, relax, and listen to The Property Show that discusses all things business within Central Alberta.
The Wave Radio in Sylvan Lake. Welcome to the second episode of The Property Show. I'm your host, Kevin Lapp. This show is about all things business, real estate, and community here in Central Alberta. Today I got a special guest with me. Again, we talk about bringing this show so that we can bring massive value to our listeners, industry experts that are in the community serving and supporting, whether it's real estate related, business related. I'd like to introduce a good friend of mine, also somebody that I work with very closely on my own personal assets. Who has been almost a mentor to us when we started in the commercial business. And Donovan Gemmell from Servus Credit Union not only comes with really strong accolades in his business, but also in our community. So welcome Donovan Gemmell to the show.
Thanks, Kev. Thanks for having me.
Yeah, so Donovan, just tell us a little bit of background about you, your industry, a little bit about yourself and the community. I know that you've been involved heavily in our community for several years. Donovan has been involved as a coach in both minor ball and in hockey and several things. So Donovan, just tell us a little bit about your journey and part of the community and where you're at in business.
Yeah, so thanks, Kev. I moved to Central Alberta in 2000 and started with the credit union shortly thereafter with, moving down here with my wife. And started off in dealer services doing conditional sale contract type loans and then moved into a retail capacity for a couple of years. But at that time, I was given a little bit of exposure into some of the commercial side of things. And shortly after that, I went into commercial lending as an analyst. And then I spent 10 years in commercial credit with a lot of adjudication responsibilities and policy procedure, stuff like that for basically the southern half of Alberta. A number of years ago, I went back into the operations side, and currently I'm a market director of business banking for Servus Credit Union, where we work with a really good team, really strong team, managing portfolios of basically business owners.
Yeah, and what type of, assets and portfolios are you guys working with? You guys are diversified in several different sectors. Donovan, is there a special sector that you guys are focused on, or is it right across the board?
Yeah, it's across the board. We take care of all business owners. We work with many different industries: real estate, manufacturing, transportation, oil and gas, of course.
Yeah.
In our community is a big one. And then a lot of franchises and other businesses of that nature as well. So we have a heavy investment in real estate. It's something that we've done for a long time, and we've done it very well. But we are looking to diversify and be more involved in the entire community and the business community, I guess.
Yeah, and you can see that. So some of the questions that, and I guess before we jump into the meat and potatoes of our business and commercial real estate and commercial lending, lending in regards to the businesses that are growing, startups and so forth, Donovan, I just want to, jump into the community support side of it. I know that, I've known you for years and you've been involved with minor hockey, on the board, involved through that process, and, just maybe speak to that in regards to what that was like for you as a local in Sylvan Lake. And I know for us, I was a coach for 7 years, and this is the first year that I elected not to be a part of it. One, because we got way better coaches than I could ever be, but just the amount of support that these people, the time that they put into it. I just want to recognize not only yourself, but all of the coaches, the managers, the people that are involved in minor sports to keep that going. It's volunteer work. It takes a lot of time, and I just want to thank you and thank all the other people that are in our communities doing that for the young children that are developing into sports, and obviously sports develops them into business and so forth.
Yeah, no, we've spent a lot of time. Actually, when I first moved to the community back in 2001, I was an assistant coach at the bantam level here. Some good friends of mine at the time were coaching, and they brought me on board to get involved in the community. At that time, as being in my early 20s and not really know anybody, it was a great way to get involved in the community and get to know some of the great people that are in Sylvan Lake. But now with my own kids and being involved at this level, up until a year or so ago, it was great. It's hard to find volunteers, and I think we need to do a better job of treating our volunteers well, not myself or you particularly, but just in general, showing that appreciation and recognizing the amount of effort and time that's put into what they do. Coaching hockey was a great way for me to get involved, to meet a lot of people. It's definitely helped me out on my professional side
100%.
By getting to know a lot of the very, very good people in this community. A lot of like-minded people as well that are committed to their children, committed to their community, wanting to see those kids not, like you said, not become great hockey players necessarily, or ball or whatever it may be, but to just raise good people who are respectful, mindful, driven individuals. A real sense of teamwork is important, and that's what sport brings us. A person who I worked with for a number of years told me before I even had kids that you can't pick your kids' friends for them, but you can put them in the right situations to make the right friends. And I truly believe that team sports and community stuff puts those people together. And we've made great friends over the years, and my children have made fantastic friends as well through it. So that involvement was great when I had the opportunity to do it, and I was kind of sad to see it pass on. Yeah. But there's a lot of good, hardworking volunteers that I commend for what they do in the community now. And outside of sport, I spent time on the Sylvan Lake Rec Parks and Culture Board. We were involved in building a new arena. We were involved in a number of things back when I was there. And again, for the same reasons, it was really good for me personally and professionally to see some of those, budget requests and things like that, where I get a little bit of an insight into how the community actually operates and how boards work and things like that, which has given me some different perspective on things. Yeah,
100%. It's relative to my whole entire journey through sports and then into business, the relationships that you build, the trust, and an awareness around who you are as a human being. I know for myself, dealing with Donovan, it started out at the hockey rink and led to a conversation of, how do we move forward in investing in several different things, and then that relationship is kindled for a long period of time. So again, a huge thanks to all of this Sylvan Lake community, the people that are putting in time to support minor sports, the managers, the coaches, the parents too. It's a big commitment, and we understand that, but the appreciation for these people that put their time and commitment in is huge for these kids in development. So again, the show is not all about just real estate and business. It's about the community and the development of the people of the community, and hockey and minor ball and minor sports is a great way for us to come together, to learn about what people are doing, and have some personal, intimate relationships where you can move forward and be successful with different ventures as we move forward. So appreciate your time and commitment to the community, Donovan.
Thank you.
And this one here is more about commercial lending. Last show I had Jean-Guy Turcotte. We talked about the real estate market more so from the residential aspect, the interest rates. Again, know your markets. I can't reiterate this enough. In our residential environment, we still have incredibly low inventory. We have a massive influx of people coming to our province, not only for jobs, but also, getting out of bigger markets like Toronto and Vancouver and so forth. Today, I really want to dive into the commercial investment side of it and business alone. We have business startups in our community in and around Central Alberta. We have people who are doing mergers, acquisitions, looking to grow their companies, and I think we're in an interesting environment. There's some impacts of where we're at with interest rates, where some asset classes are seeing some difficulties. But let's pick Donovan's brain a little bit about what he sees in the marketplace right now. I know for me, even COVID, we had a lot of people that were choosing not to be in office spaces. And so we had a high vacancy rate for a very long time. And I think now that we're, 2 years out of this, or a year and a half out of it, people are starting to want their employees back into the office environment. I think it's not only healthy for the employer and the employee, but also just in general as a human. People are locked down, they're in their houses, we adjust, and we think it's good, and for some people it is. Yep. So I've seen some shifts, not only in that marketplace with office and retail. We now have people that have confidence in moving forward with businesses, and taking a little bit of risk, knowing that we're not in a pandemic.
Yeah.
Let's just talk about a couple different asset classes and what you're seeing in the marketplace, Donald.
Yeah, so I think that office space is an interesting one to touch on, just because we have seen high vacancy, and it hasn't really affected Red Deer as much as it would affect major centers. Of course, everybody knows about the vacancy in downtown Calgary and what they've been dealing with there. But I think, as you alluded to, we're seeing more of that return to office.
Yeah.
Some of that vacancy has been absorbed in the last year. I don't have any statistics in front of me, but going back into, the second half of last year and into this year, there has been some significant absorption in a place like downtown Calgary. So you're probably not going to see a return to normal, pre-COVID normal, I guess, but that hybrid work environment is something that people do. To speak to what our team does and how I like things, we have opportunity to work from home, work remotely if necessary, but I really am, acutely aware of where our team needs to be and to bounce things off each other and work in that space together. It's so much more effective, in my opinion, for what we do anyway, to be able to have those conversations and sit down and work through an opportunity. When we try to help our members or our prospects with their business, and whether it's an existing business or a new venture, being able to sit in the office and pick other people's brains with the experience that they have is so key to help that member shape their financial fitness and provide them the best level of service that we possibly can. It goes back to what we kind of do on the service side, where we're local decision making. We make our decisions locally. Yeah. Edmonton is the farthest that you're going to go to get a decision, not Ontario or anywhere else. So we're very aware of our market and want to keep that our eye on that ball, because it's very important to us. So speaking to the office space, yeah, we've seen some absorption on that vacancy, but really, I guess I can throw that back to you, Kev, because on the price point of commercial real estate, I don't think we've seen the price point move a whole lot in the last little while. It's really depending on who the person is and what their actual goal is with that investment. Is it an owner-operated space, or is it an investment space? Is it something that makes their company more efficient, or is it truly an investment vehicle for them on a holding company standpoint? So
yeah, I agree. I mean, I think there's opportunity. Our market was suppressed with a high vacancy rate, and obviously with that, it put downward pressure in regards to some of the rates. Yeah, so just talking about where the rates and investment side on the office side, obviously with the vacancies we had due to COVID and people working from home, with higher vacancies, it did drive some of the rates down. And now, so the opportunity, if you're an owner operator looking at spaces, you can take advantage of lower rates if you can find a motivated seller who's willing to sell an asset at a bit of a discount due to the economical factors that we dealt with. If you're looking at spaces in general to operate your business in, the rates have softened somewhat. People were a lot more reluctant, landlords were reluctant or open to shorter term leases.
Right.
What we're seeing now is in all sectors is people who were able to lock into a 1 or 2 year lease at a discounted rate. And now that we have activity in the marketplace, their renewals are coming up, and the landlords, part and parcel is the interest environment that we're in, have to bring the rates up. And so now we have business operators who maybe haven't forecasted and planned for that, where all of a sudden you're going from, let's call it a $10 rate to $14 or $15, which is more normalized to the marketplace. And interest rates, are a strong reflection of that. But, over the last 3 to 4 months, we definitely have seen greater absorption of space. We have new businesses, whether it's business operator or new companies coming into our communities that are, like I said, are willing to take on the venture of starting up a new business or expanding an existing business from some of the bigger centers. We're actually seeing quite a bit of people who are opening up second locations, whether it's restaurant, some franchise, where other communities have done well, and they're pushing into Central Alberta and a lot into Sylvan Lake, which is great to see. Yeah,
I think we're seeing some consolidation in the market as well, with people finding like-minded business owners where they can find some synergies and some efficiencies, because things like those interest rates and all the other costs that have risen over the last year plus due to inflation have created that need for people to again find efficiencies. We saw it back in 2014, 2015 when oil prices crashed. People had to find efficiencies in order to keep their doors open in a lot of areas, just to keep some staff on and make some very, very tough decisions with long-term employees and long-term creditors and stuff like that. We saw it again during COVID when people had to make those decisions again. So I guess the issue that we've had, and this is my personal opinion, not a credit union standpoint at all, but we haven't had a lot of years of normal in the last number of years. We've had a housing crisis, we've had a commodity crisis, we've had COVID. So when you look back at people's balance sheets and you look back at the decisions that those people have had to make in order to keep their businesses going, you found out who some really good managers are in order to make that happen. Now, on the interest rate side of things, it's interesting because we've seen massive interest rate hikes over the last year. I think it was about this time last year that we saw the first hike, March of 2023 or 2022. Sorry. So in that year, we've seen a massive uptick in interest rates, but the full effect of those rate hikes haven't been felt. Reading what some economists and people far smarter than me write, it appears that it takes about a year for those hikes to flow through. So we're only fully seeing the impact of those first rate hikes now. It's going to take a while for those to flow through, and I guess if you look at predictions for Canada and the US, you're going to see the term recession get thrown around and things like that. And that's probably going to, start to happen in some sense. But as that market cools and those rates have to come back down, because interest rates go up to, slow down inflation, and they come back down to stimulate the economy. So as those come back down, if you're sitting on the sidelines, you're probably going to miss out on some stuff. But in any economy, there is opportunity. It depends on what your goals are and what your needs are.
Let's come back to that about whether it's sitting on the sidelines and what type of investments, and I guess strategies around how to enter the market. There's obviously scarcity, there's obviously investment fundamentals that maybe don't make sense on certain asset classes, but we're just going to go to a quick commercial break and we'll come right back at you with Donovan Gemmell from Servus Credit Union. Well, welcome back to the show here. Of course, we've got Donovan Gemmell with Servus Credit Union, who is just a great wealth of knowledge in regards to commercial lending, business lending, and just helping out communities within Central Alberta to move to the next level. Before we left there for the commercial break, we were just talking about whether it's sitting on the sidelines during these, challenging times, or are they challenging? And I guess this is the question. Yes, the fundamentals say that we could use the unclaimed word of recession. What we're seeing in Central Alberta doesn't indicate that. Now, it's going to affect some people, in different facets: fixed income, high interest rates, high, inflation, uncontrollable inflation. But what are some of the things that you're seeing, Donovan, and what's some of the products that you guys offer or solutions when, a portfolio wants to grow, they're in a certain asset class, or if it's a startup business? What are some of the things that you guys are seeing and offering to support people who are kind of in this journey right now?
Yeah, I think the suite of products that we offer is really no different than what any other financial institution offers. Again, I always bring it back to relationship and being able to have those conversations. It's a priority of mine and a priority of my teams to really sit down and listen to what people do, because I think that's where we get our biggest reward, and it makes our job enjoyable to do, is when you see people grow and succeed and their families are doing well, and you get to know their kids and everything else. It's really great. But we're willing to sit down and talk and work through it. It's not a yes, no, in my experience anyway. We don't want to be cookie cutter in that fashion. We want to be able to sit down and talk and solution things, whether it's conventional or not. We have a risk framework that we work in, and we stay within that. We, everything that we do, we have risk in mind, but trying to get a little creative on certain things to make help these businesses succeed. Because when you're dealing with a business, you're not just dealing with you as a business owner or anybody else. You're dealing with all of the families and people that they support, and everybody that works for you, their mortgage payments and their kids getting to school and everything else. So it's everything that's behind that. And because we're an Alberta-based company and we live and die with what Alberta does, we have to be very, very intimately and acutely aware,
in tune with what's going on in our community and the clients. And one of the things, and I talked about this on my last show, is building a team around people that are in the industry, in the community, and really sometimes projects take time and proper planning. And if it's not right now, maybe it's a year down the road. And I can't stress enough, from my perspective, of sitting down, building a relationship, a long-term relationship where you have a trust factor and they get to know you as a person. Because in commercial lending, business operations, there's the operator, which is super important. What is their historic? Are they brand new? Have they done it before? Have they been through trial and error? Have they been through tough times, come out the other side? That relationship is strong from my experience in dealing with you guys, and and then having not only just a lender but a consultant, a partner that you work with, and you run a plan that makes sense. Like, nobody wins unless everybody wins. The business has got to win. The people that are operating in the business, the payments need to be made. And so it's a success plan that starts from, a vision, a strategy, a growth strategy, whatever that is, and then working with your partners to make that come to fruition. So.
Yeah, ultimately all we're trying to do is help businesses and individuals grow and succeed in whatever their goals are. So, come into the office, phone, email, whatever we need to do. We've got branches all across the province, and we've got a good group of people that can help in all these regards. And shaping our members' financial fitness is what we're all about. Understanding what their goals are, helping them achieve their goals, and just getting Albertans to where they need to be. That's what we try to do.
Yeah, no, I get it, and I've experienced it. And right now, I mean, things are a little bit more challenging. So. Obviously I own property in the multifamily space. We also have some office space here in Sylvan Lake, and I experienced, having some vacancies and struggles in regards to having occupancy in those spaces. And so I understand the struggle of it, but at the same time, in a marketplace like this where, typically with interest rates, it does kill some deals. Cash flow becomes a bit of an issue if you can't increase rents. Obviously in the residential sector and the multifamily side, there's such a high demand for housing right now. With the migration that we have, we just don't have enough new construction or inventory in the marketplace to support it. And so we're seeing increases in rents. Some of the challenges right now with assets that are sitting in that class is, your NOI coverage is not quite there with interest rates being high. So what are some of the things? Let's just talk about multifamily, I guess. To start off, Donovan, like we have a ton of investors right now who are in the market, but I'm having a real challenging time in regards to, making the numbers work, so to speak, as far as NOI coverage. What we've seen for cap rates in the past have changed, and the cost of operating some of these assets have changed along with inflation. So, with low housing and huge demand, some of these assets, especially when you're dealing with townhouses where they're fee simple title, you have multi-doors, the fair market value on these units well exceed the value as far as an income approach. And so there is some strategies around, do you put more money into a deal now to make it work, knowing, and of course nobody has a crystal ball. We'd like to think that interest rates are at the top, but I've had that discussion I don't know how many times. And so what are some of the things that investors can do to combat and have confidence and make some of these deals work in the near future?
Right. So I think when we're talking about the single family and the multifamily rental space, it's different than talking about a commercial or industrial space. Commercial properties, industrial properties will trade based on the income approach.
Correct.
So when the interest rates rise and the lease rates don't come up as quickly, and they typically lag, that's what I would expect. But when you see that lag, you don't have that cash flow, that NOI coverage that you're speaking to. So on the industrial and commercial side, I guess the only real analysis is, okay, you have to put more equity into it, bring that mortgage down so that you establish that cash flow in that framework. Otherwise, it just doesn't work.
Yeah.
The only other thing is if you have other assets that you can, other cash flow that you can bring into the deal where you can look at things from a little different angle, put a different lens on it, and say, okay, we've got cash flow here that we can attach to, and that brings us to where we are. But from an investor standpoint, a savvy investor has to look at it and say, okay, today's rates are, let's just pick a number of 6.5% for a 5-year mortgage on these things. 2 years ago, we were at a pretty unsustainable level when we're sub 3%. I don't think anybody would say that, when we're paying less than 1% on a GIC and charging less than 3% on a mortgage, that's a sustainable market.
Right.
You kind of want to be in that, 3 to 4% range is pretty typical. And right now, if we hadn't been coming out of that super low interest rate environment, the shock wouldn't be what it is. But because we've gone where we've gone in the last 12 to 24 months, it's so much of a shock to the system, and all these investors have been used to these numbers, and they've worked. So on the commercial side, it's its own animal, but then on the single family and the multifamily side, those products trade on a different metric. They trade on a direct comparison approach, like any one of our houses that we would own.
Yep.
Trades based on what somebody's willing to pay for it to live in it. So when you're an investor looking for a residential piece of real estate to rent, it's a different metric, and that's why those prices haven't come down, because as you're alluding to, the inventory isn't there, and there's higher demand. So those prices have been held where they are. But the cost to own those homes, based on interest rates rising the way they have, has gone, quite crazy over the last little while. So what you have to do in that regard is you have to look at those metrics and say, okay, instead of me doing 25% down on this product and putting a tenant in there and it cash flows and I'm happy, do I need to put 35 or 40 into it today with
knowing the fact that you've got market appreciation that's behind you on those assets, and that's.
I think you're going to see rates come off too. I can't predict the future. The crystal balls aren't working right now, but we both, I think, would agree that we're at that position with an inverse bond curve right now, or the yield is inverted, where we expect to see the rates come off in the next little while as the effects of these interest rate hikes flow through.
And I think, again, there's no crystal ball in it, but if we're, year over year and based on my own holdings and dealing with my clients is, the rental rates are going up, and so if you're catching a market where supply and demand is in favor of the market, and rental rates are going up, and interest rates hypothetically over the next let's call it 24 months starts to head in a direction that's opposite of what we've dealt with here in the last 24 months and it puts you in a position where all of a sudden the performance of those assets are very strong. Absolutely. You start to hammer down principal pay down, market appreciation is there, and frankly, investors, in that space, for several years, there wasn't really a lot of market appreciation when the market, slowed down and crashed in 2015. We didn't see market appreciation until the last 2 years, and now it's actually at a rate that is quite heightened, and I don't see it stopping. We've just got an influx of interest in Alberta. The cost of living here, the opportunities that are here, not only in the oil and gas, in the farming sector, the agricultural side of things. We also have tech coming into some of our major centers. So it's like trying to predict the future of where Alberta is going to go as far as investments. I think people have to be savvy and educated in regards to what fundamentals are out there. If you listen to the media right now, you're going to be frozen and not do anything. So again, having conversations, it's not a commitment, it's a conversation in regards to what's happening in the market and some of the opportunities are there. And frankly, as an investor, you want to put minimal cash into a deal and make the numbers work. But like I said, and in my experience for several years, we didn't see a market appreciation like we are right now in certain asset classes. And the opportunity is, okay, do I put an extra 10 or 15% into a deal knowing that deal is going to be worth, whatever, 15, 20% more.
Yeah, you're going to bring your initial return on investment down, but it's still a pretty sound investment from the fact that you own actual real estate in Central Alberta. And just to build on your point there a little bit, the hybrid work and the remote work that we were talking about earlier brings a lot of people to Alberta as well. Yeah. It's where do you want to live? Where do you want to raise your family? Obviously, we've talked about this, and this is where we want to raise our family, and this is a community that we want to be involved in. So people have that opportunity to come to Central Alberta from those other areas and be exposed to our beautiful communities and as close to the mountains as we are and everything else. So it's a great opportunity for those people to, sell their $1 million house in Toronto and buy the same house here for half the price.
Half the price, yeah.
And still keep their jobs or something similar.
Yeah.
It's a very interesting time, and I don't think we truly understand it yet. But
well, and we're demanding for high skilled labor in Alberta, and so if you're in another marketplace where opportunity lies in Alberta, you've got to think about fundamentals where somebody might be losing 15-20% on an average home price of $1.5 million.
Yep.
And that's a massive impact. And also when you're carrying a mortgage and all of a sudden it's up 2.5 points, the cost of that is $1,500 a month. And if you're on a fixed income, the motivation to come out here and explore Alberta, not only for the quality of living, but also the business opportunities is, it starts to become more and more attractive, and we're seeing a lot of it. So it's
opportunities not just for you, but for your kids and everything else. And Alberta, I think, has always had that Alberta advantage, and we've been opportunity driven. Our economy's always had its unique challenges and strengths based on it being a largely commodity-driven economy. So that reliance on commodities has always been a very good thing for us, but it's had its detractors as well, because you have to ride those waves a little bit, right? So we've seen it a lot.
I say that people who are operating business in Alberta are some of the most sophisticated, resilient people, and find a path, because our fluctuation, like you said, in our marketplace based on the commodity market we're in, things can change quickly, and you've got to shift and pivot. And so I've got to give, a lot of a testament to the business owners who have not only gone through COVID, but also gone through, when oil and gas crashed in 2015. Some people didn't survive. Doesn't mean they're not good operators. The market shifts in a massive direction, and sometimes you can't support getting out of it, but there's so much resilience, and I think our skill of operators in business in Alberta, and the fail forward is the common word, and I think you learn a lot, and so we've seen a lot of people that have come through this and now are back in and looking at opportunities, and I guess that leads to another question is, what are you seeing in your capacity, Donovan, as far as is it right across the board, all sorts of different lending? What are some of the common things, or is there a trend there that you guys are seeing on your end?
Yeah, like I said, I think we still do a lot of real estate, but as we've talked about, the metrics have changed in that market, but there is still opportunity, and there's still a lot of activity in that area. So we continue to do what we can on the real estate side, but we are looking to diversify and get into more of that diversified lending portfolio, where we can do more commodity-driven stuff, manufacturing, transportation, and just work with those members and help them work through this tough time. The interest rates and those conversations, I have a lot of people coming into my office and talking about those things right now, and those are the troubles of the day.
Sure.
And how do we manage through this, and what adjustments do we need to make, and how do we restructure things to make them make sense in the long term? And that's really what it's all about for us, is finding those solutions to those immediate needs. And we're local and nimble enough that we can have those conversations and usually have answers back to people relatively quickly. So, but what I'm seeing is really it's across the board, and we have seen a slowdown in some areas for sure, but I think there's that initial shock, and then people start to understand what the new reality is.
Sure.
And what are you going to do? You just have to educate yourself, make decisions, talk to your trusted advisors, whether that's your realtor, your banking relationship, whomever it is, and
build a new plan. Build a new plan,
but make an educated decision. And do the right things, and speak with your accountants, and work through your valuations and your projections, and do all those things appropriately. And it takes some time and it costs some money, but it's the right thing to do to make sure that you are a prudent manager to see through all these things.
And even like I said, with my clients that I'm dealing with, doesn't matter what investment sector. On the commercial side, we're running more pro formas than I ever have, because you're trying to understand the market at a different level. You have some fundamentals that kind of stick for 4 or 5 years, and then you have a pivotal shift where we've seen a pendulum shift in regards to interest rates. And so now it's, where is the strategy? How do we lay this out? What is some of the forecasting? I mean, we've gone back and looked at historicals of what's the interest rates over the last 20 years. Right. Okay. Yep. Is it perfect data? No, but typically the past will predict the future. The future, is something that we've got to carry forward with. So you've got to pick a base point and know that the metrics aren't going to be exactly where they are today. And some of the assets that are out there, because of low rates, high interest rates, there is sellers that maybe want to move that asset depending on where they're at, and so there is opportunity as long as you can look outside of 1 year projections. It's that's not a tangible way to analyze real estate, and of course there's some risk management, but with historical data and understanding what the economics are in Alberta, I think there's plenty of opportunities for people to enter into the market and see the fruits of it here in the next 2 to 3 years. Yeah,
and I think when you're talking about pro formas and looking at things, okay, where are we going to be is pretty important right now, and it's not perfect in any sense, but when we've had the last few years that we've had with COVID that was completely unprecedented, a lot of balance sheets were significantly affected for reasons out of everybody's control. But we have to look at those. We can't just take the last 2021, 2022 balance sheets and say, okay, this is what this company is. You have to do a lot of due diligence and a lot of digging to understand what's truly going on. And then where is that life cycle and how has the market shifted and everything else that's involved with that.
Sure.
So we have a lot of in-depth conversations, and our team is very good at what we do in that regard to truly understand what we're trying to do and what our member and our partner is trying to do to get where they need to go. So it's talking about the last 10 years. There hasn't been a lot of normal.
No, that's for sure.
But we've worked through it, and we just have to keep working with everybody to get through to the other side.
Yeah. I think I don't know. I don't have a crystal ball, but I've been in real estate for a while, and just the fundamentals of the shift that I've felt, starting last year, and then rolling into this year, not only on the residential side, but the commercial side too. Industrial space, an incredible amount of vacancy. Yes. We had a lot of our, strong operators, have to pivot their businesses, go up north, leave some vacant space behind. And just over the last, couple months for myself, we're now seeing some good operators either expanding from other provinces, coming into Alberta, people who are also maybe merged with another company, who are starting to look at these spaces. And I didn't do a lot of lease stuff previously, mostly on the sales side, but with the interest rates where they are, there's not, it's slowed down some of the sales on that asset class just because the numbers don't make sense, and a lot of the investors are not prepared to sell those assets at what would be perceived as an under market value. And but as we are shifting, these rates that were offered in industrial space at $6-7 a square foot, we're now seeing it where spaces, quality space is being absorbed. You're having to go back to pay rates that were, I wouldn't say at the peak of where we were at in 2014, where we've got a ways to go. But we are gradually gaining steam on that. And, I think just working with clients in general is just giving them fundamentals on what's happening in the market and as it shifts, because in Alberta, as we know, when it shifts quickly, right? And some missed opportunities. So I find with clients right now, we're negotiating on rates that were maybe securable last year or the year before, and we're not getting there, and now the space is starting to be absorbed, and now we got to move. And we talk about lag time in commercial real estate, and if rates are starting to be held and we're creeping up, then all of a sudden these asset classes then become marketable to investors again too. So we're seeing shifts, and I believe that the market is interesting, but I believe that we're heading in a really good direction in Alberta, it's exciting times.
Well, yeah, I guess we've talked about construction a little bit, and there's a lack of industrial and commercial construction happening right now. So when this market shifts and companies are coming into Alberta, we have net positive migration, things like that are affecting us, then where do those people go? They fill up that existing space.
Yeah.
So it's somewhat reactionary, and there will be a lag time if those spaces start getting leased up and people start seeing new construction in those areas as a good investment opportunity. Then you'll start to see more of that construction. There's still construction activity that's happening in the province, and that's great to see.
Yeah.
But I think you could see an uptick on it if that truly continues in that trend.
100%. Well, we're going to go for a commercial break here, and then we'll jump back in with Donovan Gemmell, Servus Credit Union. It's just an awesome topic. Hopefully you guys are enjoying this. We'll be right back at you. And we are back live with Donovan Gemmell. Just an awesome conversation. Hopefully you guys are enjoying this as much as I am. I was just saying to Donovan during the commercial break, I could probably do a show with him for 3-4 hours. We get in a room together often and talk about the market and strategies, and it's always an exciting time for me, and it's really great just to have someone with an extensive knowledge. Some of the things I want to cover off, Donovan, just regarding your company with Servus, how do you guys determine the credit worthiness of business seeking a commercial loan? What are some of the things that you go through? What are the processes, and how you go through that and guide someone?
Yeah, I think we've probably touched on a lot of this already, but really it boils down to a number of factors that are very important to us. Management, of course, is key, and we've alluded to how important management's been in Alberta over the last number of years and how important 100%. It continues to be. Industry and market factors, we always want to assess the industry, the market factors, competition, those types of things to truly understand where this business fits in their current market or the market that they're trying to break into. So whether it's a new business, existing operator that's looking to grow or maintain, a business that's changing its life cycle a little bit, maybe we're dealing with succession planning.
Yeah.
We always want to be aware of what these businesses are doing, not just today, but in the future. So we're looking at management, we're looking at industry and market factors. Of course, cash flow, historical cash flow, pro forma projections, understanding what this business is looking to do. A lot of times what we see on the cash flow side is a business is pivoting. Maybe they're introducing a new product line, or they're purchasing some new equipment that's going to help enhance their business. What cash flow does that equipment necessarily bring into their business, or what does that expansion do to them? If we're talking about a trucking company that's adding more to their fleet, where is that precipice that it actually makes sense to go from 6 trucks to 12 trucks, or do you have to go from 6 to 25 to make the numbers
sense, work? Yeah.
So we work very, very closely with our members to understand what they're trying to do, and we ask them a lot of questions that hopefully they ask themselves, but sitting down and just dialoguing it and having that open conversation is so key to maintaining that relationship and building that relationship to help them be successful. And I think that's what we do very, very well where we are. So management, industry, market, competition, collateral, cash flow, succession planning, all those things play into it in what we do to try to qualify people. And it's really not qualifying for them for their loan or their facility, whatever they're looking for. What we're trying to do is shape their financial fitness.
Yeah, 100%. Success plan that works for everybody.
Yeah.
On some of that, I mean, what are some of the challenges that people are faced with in the environment that we're in? What are you guys seeing in your environment that are pros and cons of whether someone can move forward, advance into either growing their company, and then once you kind of cover that off, I think one of the topics I'd like to touch on before we end the show, and just remind me to go back on it, is businesses that are starting up as well. So don't mean to bounce around there, Donovan, but I wanted to kind of cover that off. So so just going back, what are some of the challenges that Albertans are facing when trying to obtain a commercial loan or advancement in regards to growing whatever sector they're in?
Yeah, so there's a few different factors here. Of course, when you're looking to grow your business, you're dealing with people, finding enough people to, and labor is a very big issue for us right now. It doesn't matter on what industry I speak to, which business owner I speak to, finding the manpower to do what they need to do is a problem. So, and then when you're growing your business, what space do you need? What do you need to grow as far as space, equipment, leasehold improvements, those types of things? So we try to gauge that and understand what they need, and then we can facilitate it through traditional lending platforms. We deal a lot with working capital, especially when we're going into these growth phases like this. People are trying to ramp up, and there's that lag or that funding gap between when you do the work and when you get paid for the work, and you got to pay your bills and pay your staff in that meantime. So working on a lot of projections, monthly cash flow analysis, daily cash flow analysis in some places to ensure that we identify those funding gaps and help people manage them appropriately. So from a lending side, the struggle, I guess, that we see is just how do the historicals play into what we're trying to do today?
Right.
And if they don't align, how do those changes that the business is trying to make sense for them going forward?
Yeah.
And of course, when you're doing projections, there's always a likelihood that it's not going to necessarily hit that number. But we ask enough questions and have enough of a conversation and try to understand enough about the market that we can take a lot of that what if out and hopefully get a higher percentage of accuracy with them to help them meet their needs.
Well, and that's the biggest thing when businesses are ramping up, an opportunity is there, the work is there for them. You're taking that risk on to take on more employees, take on more debt, equipment, should be assets, but it's a calculated equation, and it has to be managed by the operator, and it has to be managed by your lender to get a comfortable zone where you believe in where your projection and your forecasts are going. And so, I think in Alberta right now with, especially in the oil and gas sectors right now, the companies, we're chugging along and doing fine, but the opportunities are there now. So now the struggle is, how far can you ramp up? How fast can you do it? Do you have the people, skilled labor to do the work? And, some of the other factors that they were dealing with is, getting equipment. I think the channels are getting a little bit better, but I still know that that's an issue too. I mean, people needing equipment that could go to work tomorrow, and it's going to take 6 or 7 months before it even arrives here. So
we've seen a lot of the supply chain issues, and people trying to manage through those, and it's through no fault of their own, but we have a lot of cases where projects are delayed and things are behind just because of supply chain issues. And I think some of that will start to subside. I know economically we're seeing a reduction in some of those commodity prices right now. Interest rates are going up, but some of those prices for chips and things like that you need to do what you do, lumber, things of that nature, it's coming back around, and we're starting to see that start to normalize again.
Which I think will be good here too. It's been a long stretch, and of course, all of this equipment and stuff is at high values, which is good in some aspects. But again, having work and not being able to facilitate it with the lack of equipment and supply chain issues, and like I said, I think one of the biggest things with Alberta right now is that we do have a trajectory of strong growth in the oil and gas side for a foreseeable future, and getting some employment, and it's nice to see that people are moving back to Alberta with confidence that we're in a marketplace that'll be strong here for a while. And
so to take that and the people moving back to Alberta, I'll circle back to your businesses as startups and new to Alberta, or people that are leaving an existing work relationship and then wanting to go out on their own. There's definitely products available. We are willing to sit down and talk with anybody about that, but there's government guaranteed, government backed programs that we can access to help facilitate those things. So there's lots of opportunity for new business owners to sit down and have good conversations and make that work.
And I think this is the important thing, just even in my business, I get to chat with a lot of people and I have a fairly strong network, and I think people need to understand when it comes to the startup business or having an idea starts, but you build a team of people around that idea and then come up with tangibles. And you don't have to know everything. You got to know your industry, you got to know what you're doing, and you got to have a passion for it. But I think the steps are, again, engaging with people that are in the industry, having support with your lending partner, having a game plan, building a business plan. That's not something you have to do on your own. And I find that people sometimes get stuck on the idea that they have to have all the answers. And the reality is that when you align yourself with people who, number one, care about you in long term of what you're doing, and they're educated in facets that maybe you're not strong in, but building a team around that, getting the information and asking great questions will lead the curve of standing in a paralyzed state where you want to do something but don't know how to get there. And I really encourage anybody who's starting up a business, looking at expanding a business, is go out and meet and ask great questions with people that have a good understanding, because they are your guide and they are your team to succeed in the long term.
Yeah, absolutely. Having those trusted advisors, whether you're the business owner or in my role, wherever we are, we always access that knowledge and work with people to try to understand. I talk to appraisers and realtors and accountants and lawyers all the time to understand what's going on and what are you seeing and what's different out there.
Well, I think everybody that's in the industry doing it, and we all feed off of one another and have great conversations. I think staying in the loop and being naive that somebody else is going to be able to offer you a different insight or a different perspective, I think it's super important, and I emphasize it on a regular basis. Like, it doesn't matter what part you are in business or investment, is really building a trustworthy team and working with them. It just makes such a difference, in your success plan moving forward. Yeah,
and that's what we really try to do, is we try to have those conversations so that we understand not just what the ask is, but what truly is appropriate. It's not the sale, it's not whatever, it's you don't need X or Y. It's what's best for your financial fitness. How do we best provide you with what you need, because we do have your best interests at heart in not doing that sale. Of course, in every industry there are sales and it's a business, but it's truly about shaping that financial fitness and understanding what their short-term, medium-term, long-term goals are. And our team, I think we do good at that, and our team is relatively. You guys do good. We're relatively young, and we've got a lot of runway left in us. So that's what I like about our team too, is we have the ability to grow with the businesses that we're dealing with now.
Awesome. Yeah. Donovan, we're getting to you could talk, and you and I could go on for hours here, but we got to wrap up the show. Is there any last comments that you want to make in regards to your company, your value proposition to our audience? Like I said, Donovan's a great friend and a trusted advisor that I work with. If you want to wrap up just a little bit in regards to how people can communicate with you, reach out to you, that would be amazing.
So email, phone, text, come in and see us, have a coffee, whatever it is. But I guess as far as value proposition, I think member service is our biggest single differentiator. In our industry, interest rates can vary a little bit, fees can vary a little bit, but for the most part, products are the products across the board. So really, member service and that attentiveness is what's important to us. Besides that, as a credit union, we're member owned, so we are a company that pays back profit sharing every year and pays that patronage reward, which is different from most of the financial institutions out there. And that also provides us the value, because we're putting the money back into the community. So back into into minor sport and wherever else, because it's going back to the parents and the business owners and back in their pockets. So we put the money back in the community versus distributing it to shareholders globally or into mutual funds or wherever it is. But that our decisions being made locally, we understand Alberta. We understand.
Yeah, I think it's key.
Difference.
I mean, having somebody that's boots on the ground, understanding what's happening in our marketplace is incredible value. You're communicating with all different business facets. It's massive value. So that's important. I think even when I speak to my credit team in Edmonton, a lot of them are from here and they understand a lot of the same stuff that we understand, and it's really nice having somebody that knows where Black Falls is and things like that, right? So it's fantastic for us from that regard. And I guess one other thing that I'd like to mention is that we are under the Credit Union Deposit Guarantee Corporation, which means all deposits at the credit union are 100% guaranteed. There's no caps, there's no limits. It's basically backed by the Alberta government, so we're very strong there. Yeah, lots to offer.
Yeah.
Donovan, I can't thank you enough for taking the time to come on the show. I'm definitely going to end up having you back again. We got so many other things that we could talk about and add value to our audience. But for today, that's a wrap. I appreciate you so much. And like I said, if you ever need anything or have questions or support in whatever facet that you're doing in your investment, your business operations, Donovan's a great resource and highly recommend him.
Thank you.